In today's video, I'll be going over my entry model. So as highly one of the requested comments from after I posting how I determine my daily bias, I got a comments how do I look for entry, and also what's my entry type of model and what type of model do I look for. So essentially today's I'll keep it short and simple on my bread and butter criteria like look for. I mean, there are many ways to entry pattern are usually in my eyes everyone enter similarly, whether you use volume, where you use order flow, or just price action. Usually you're entering around the same spot. But I'll kind of go over on the top to bottom analysis on what I look for after I determine my daily bias. So first thing, you need to determine your daily bias. So if you haven't seen the video, please check it out. That daily bias essentially is your direction of the trade that you want to look for. You don't want to fight the trend. Usually, if you fight the trend, it's going to be a little bit tough. There are cases where you can do a short scalp, quick scalp to get those profit. But usually, I don't like to trade against the trend. I like to trade against the higher time frame trend. So start with the bias and the higher time frame and show some sort of strength in either bullish direction or bearish direction. Once that happens, we look for some sort of liquidity sweep opposite of the daily bias. So for example, if your daily bias is a bullish scenario, you want to look for liquidity sweep or a stop hunt on the sell side level. And then vice versa. If your daily bias is bearish, you want to look for some sort of liquidity sweep at the equal highs or relative to highs at the buy side level. Okay. Next thing this happen, we look for some sort of market structure shift or change in state of delivery, where this gives you confirmation that there is a shift in control of buyer and sellers, which will later form a market buyer model or a seller market model, right? And then next thing, you can enter on any retracement into any bullish or bearish PD arrays. So this is up for preferences, but I'll show you a couple ones in this quick example here. So, okay, let's dive into this example. So here on the big block here, on the green block up here, this is essentially, I marked out on the higher time frame, my interest zone that I want to see price respecting it. Once the price tap into here, I want to see price respecting this zone and do not break above this zone. This is essentially my liquidity zone. If this respecting it, I expect it to go towards the sell side, which this is form a seller model. So let me out. So you can see this is some sort of a seller model, okay, going in this direction. And then obviously there's a second half of this chart. There's no screenshot of it, but essentially there is a buyer model going from all the way up here. And then now we want to see some sort of direction shift. The next thing, the second I look for is the liquidity sweep. So here, these are the lower resistance liquidity run. So these highs, and then these relative highs up here. Once this gets swept, I want to look for some sort of market structure shift. So this will be the market structure shift. Once there's a break of pattern of market structure shift, we want to look for some sort of retracement back into this liquidity area that I'm looking for. So something to highlight here. Ideally, so this is the pre-market. Originally, I thought this was gonna come in here and tap into here, and then I'll enter on this candle. But this didn't create any resistance run. It continued downwards. Then it shows a continuation up to grab this liquidity. So there are cases where you will see price going down, up, right, and up, and then generate more, in this case, buy side liquidity, go down, buy side liquidity generated, and then all the way up, getting all these buy side liquidity, grabbing them, and then before we have this displacement move. Essentially, this is the move that I want to look for. I want to capture. I don't want to be in this zone. This zone is a no trading zone. This is essentially just accumulating buy side and sell side until the price is ready for the displacement. And then we want to trade the displacements. Okay. So once I see this is formed and pull all the way back here, there are a couple PD arrays entry I look for. One, there's SMT formed with ES. And then there's also a fair value gap. So there's technically two fair value gap here. I kind of just line them up they're all stacked together. And then later, mainly what I use for is the OT. I grab this high and this low, and then you can see the OT zone from 61.8 and 0.786. So this is the OT zone. And then also align with confluence fair value gap. My entry is essentially once it tap it into here and also align with an OTE. My entry is enter up here. So essentially I enter at the top of it. Sometimes it does retrace a little bit for a little further deep into your risk, but usually you should be safe since this is the protector low. It should not break this. So I put my stop outside this protector low, just a couple ticks outside. And then my target is this sell side. For the delivery into completing the sell side model, right? So this is roughly a close to 3RR, which is a very good clean trade, and you can see how efficient the price move. Once all these liquidity, market structure shift, liquidity generated, grabbed it again, you can see a clear displacement down. So this is as simple as it gets, where we want to look for, again, bias. Once you have the bias, in this case, my bias is I want to see continue downside into seeking the sell side liquidity to be complete this sell side model. Then I look for some sort of liquidity shift, which is here, and then I wait for some sort of market structure shift or change in state of delivery. So in this case, this is the market structure shift. Once there's a shift down here, I want to look for some sort of pullback. So entry retrace at any PDA rate conference. If you use SMT, you use OTE, you use fair value gap, you use inverse fair value gap. There's a lot of different PD arrays that you could look for, and then you just put in your entry. I always usually only use limit order, so if I know where the price is going, I just set a limit order. Once it's at tap, I will set my stop and my profit, and I just walk away. So either this trade is going to be a loss or be a win. And something to highlight here: always only look for A+ setup. Do not bother looking for B. In my eyes, don't bother look for B+, C+. It's a waste of time. Every day, majority, 90% of the time of the day, you will be able to find A+ setup. At least one trade, which is this type of trade. You want to be in this type of displacement where you have speeds and volume that gets to your targets. If there's no speeds and volume, that means most likely the case, let's say you enter here, right? If you enter here and then you didn't get to the sell side, go to do this, pull up, and then come down. Usually that means you're still early to the party, that you're still in the accumulation phase, which a lot of trader probably, if you enter through here, which is fine. I mean, you stop, would just be, entries here, entries not up here. It's pretty much roughly the same. Less confluence as well, but here I think it's also fine for your initial entry, and then you can add in position up here to scale in or pyramid in for add on to your winner position, and then just target sell side. But usually here you can see you had to sit through this for roughly 2 hours. So this happened at close to 9, and then this move did not happen until 10:35. So almost 2 hours you had to sit through and be patient about it. But for most cases, I wouldn't take this. I'll wait until there's a clear pullback into my key zone of interest and also align with multiple confluences in this case. Okay, now let's dive into our first example here. So here I highlighted in the purple box here. So this is the 1 hour fair value gaps that I'm looking at. So I'm currently looking at the 5 minutes, but this is the higher time frame bias I have. So usually higher time frame bias, I always look from 30 minutes and above, never below 30 minutes, but I always start from 1 hour and then look down to 30 minutes. If I don't find anything 1 hour, if I find something 1 hour, I stick to 1 hour. And then if I don't find anything, I also look at 4 hours as well. I typically do not look anything greater than 4 hours for intraday trading or day trading, essentially selling within the same day. So the next thing I want to look for, something to highlight here, what we want to see is I want to see if the price will continue to respect the zone. So we can see the price pull all the way back down to here, respect it, all the way up, respect it. And then we can see something very clear here. There are relative equal low here that was taken. So this sell side liquidity of these equal lows has been swept relative equal lows has been swept by this candle here. So this essentially, I want to view this as a protective low that I want to see the price doesn't move past down here. And then also something to highlight is this is my entry zone. Also for, so if you from the higher time frame, right, just highlight it out. This is what I want to aim for. And reason this is higher time frame of the liquidity where there is a fair value gap here that I want to see it get filled, and also this align with OTE. So I expect the price to continue moving into here as rebalance price as my first target for today's bias. So my today's bias, essentially what I'm looking for is some sort of buy side model. So you can see this is a buy side model of here. I want to see some sort of price breaking this market structure. So you can see on this is a higher, I'm looking at the 5 minutes. This is I want to see some sort of market structure shift at this level. Once the price break above here, I want to see a pullback into the zone or some sort of PD erase, and then I want to look for entry all the way back here. So this is essentially what I want to look for in the trade itself. Okay. So now we want to take a look where we can enter for our trade. So I let this play out. So you can see the price close above here and kind of already missed the entry. It will be at this candle. Once there is a clear close candle, so on this candle here and this candle here, they already closed out. There is essentially verified there is a market structure shift. So here, I'll take this high, low to high, right? And this is my OTE zone. So if I take here, it will be my entry, OTE. And also here, you can see there is a fair value gap is respecting. Now, so this will essentially be my interest of entry, my limit order. When I see this candle close, right? So let me zoom in here. When I see this candle, these two candle close above, I will set my limit order for a long at here for 0.618, and then my stop will be at this low, and then my high will be up here. So there are relative equal high here. So let me highlight this out. So not relative equal high. So there are a significant high that was generated over here, and this high, and this high, right? And then you have this high all the way up here. What I want to, you can use this as your first initial targets, and then your remaining runner all the way up till here, right, into this fair value gap here. And this will give you a 3.4 RR, but just for the first one, this give you a 2.3 RR. Okay, so I'll just leave it here, and then I'll let the price run. First PT hit. It hasn't tapped into, there you go. So this will be your final target on this candle. So here it's pretty straightforward on this. Enter on any PD erase once it retrace back. Once you confirm that, and even here you kind of have two chances, right? So let me move this out a little bit. For example, if you miss this entry here, you could enter over here. So this will be your OTE, high to its low. You can see how this also respected this OTE. And this is not, this is where you think there is a coincidence of why I respect OTE. It's not a coincidence, right? Generating price is always doing two things: generating liquidity and grabbing liquidity. Once the liquidity is formed, we'll go for previous generated liquidity all the way up here. So I expect the price also trace all the way back here, at least to the OTE zone. If I let it play out, it should go higher to, yeah, so it does. So it move all the way back into OTE, and of course it will rebalance price, right? So once liquidity is generated, it will rebalance all these, or go back and grab those liquidity, rebalance price before continue moving down. If the overall bias is bearish. But in today's intraday's bias, I want to see it at least to rebalance the OTE. So for my A+ setup for the day, there's no reason for me to be afraid on, even adding position through here, right? And the additional, once it pull back to my interest zone, add additional OTE into this zone, and add into my winning position. I will always know this is my, essentially, you see this is the protected low. Price will never move down to here. Once the liquidity is grabbed, this is protected low until the buy side liquidity is finished, right? Until this buy side model is finished, price should not trace all the way back down. So if the price before even completing this buy side model and already come down here to grab this liquidity, that means most of the case you're in the wrong side. You're reading the trend wrong, and that's when you should know either to close today's call and don't trade at all, or look for another model for the next setup. Okay, now let's dive into the second example here. So here we're looking at a different market. This is gold itself, so we're near around 8:30 pre-market. So we haven't near the market open, but we want to see something we're seeing here that I've drawn out. This is the order block, that the key zone of interest I'm looking at for the price it's respecting. So we can see the price moving up here, same thing as the previous example. And we see there is a liquidity sweep at here. So what I'm waiting for is I want to see some sort of market structure shift down here, right? I want to see some sort of market structure shift, and then once there is structure shift, I want to pull back into my key interest zone, same thing as well, and then target this 1 hour fair value gap down here. So this is my sell side I want to look for. And also if you look to the right, so if I here is the sell side I'm looking for. Okay, so this is the sell side I'm looking for. Next thing I want to look for is the market structure shift. See if the price will break this and then start forming a buy side model. Sorry, the sell side model. Okay, so we have this case. Okay. We want to see some sort of sell side model to complete. So we will look. Okay, there is a market structure shift, and then we want to look for a retracement back. This high to this high to this low. What I'm looking for. So my entry will be at OTE within this order block here. Be my OTE. My entry will be in this key interest zone, and then I'll just target for outside, and my stop will be outside this protective high over here, where it swept the liquidity and have this impulsive move down. My entry will be technically here already been tapped in. So it retrace back a little bit more. We have patience. Here we go. So you can see here, this is a oops, let me stop this. This is a very clean example of why it's important to have a daily bias. So if you haven't checked out the daily bias video, please check that out. I think a lot of traders are jumping into entry model. I know today we're mainly talking about entry model, but this also highlighted why it's important to have daily bias. If you don't have daily bias, it's very, very hard to have conviction and hold trade like this. So on these days, I remember sitting through this, and probably back when I was trading in the early career of my trading days, I'd probably be sweating bullets and probably would have moved my stop already to break even. Once I saw the move down, probably moved the stop at break even. And then when I saw this move down, I will probably retrace into somewhere down here, which is a horrible fail. And also you're just tracing price. And if you're wrong, your risk now is not here. You're right, your risk is not here. Your risk is where you enter. The risk and reward is very, very not great. So this essentially build confidence for you. If you know the daily bias that you want to target aside, and you clearly identify this is today's it's a seller model, you don't have to be afraid of putting your stop up here and don't ever move it, right? This is the protective low, right? This should never get tapped into here, even when it does this. As you mentioned before, this essentially just generating more buy-side liquidity, right? And then for this legs up to grab it, to have this displacement leg. It just means that there are times, right? There are times you have to know there are times that you won't always be at the top, enter at the exact moment of this displacement leg, right? You will never be entering here and then you get out here, which is fast. There will be time where you're early to the parties. And when you're early to parties, you want to be able to sift through it because you do not want to miss this whole move down later. Then you start having the FOMO and then you start having regrets and you become salty, where you lead to taking a second trade that has the worst entry, or just taking whatever setup you see, resulting to you taking a loss multiple times over and over and having no discipline. I would say discipline is the second thing to have. You shouldn't rely on discipline. You should always rely on your strategy first. If you have a rule set in place, you don't really ever need to tap into discipline. Discipline is rely on emotion from a human side. It's very, very hard to control that over days in and days out when you're constantly sitting in chart, looking at price moving. Relying on discipline is very, very hard. But if you just relying on a set rule where you can quantify things, it's much easier to do this, right? Here, I enter here at this market opens. Obviously, the market's not ready to move down here. But I also know the market will move down here eventually because the sell side model is not completed yet. If the sell side model is not completed yet, I'm not afraid, right? For example, let's put it in this way. Let's say if this leg pull all the way directly into the sell side model and complete the sell side model, will I have entered any trade up here? I'll give you a couple seconds to think, right? Let's say if this leg didn't pull back into here, it's just complete into sell side model, will I have entered a trade when the price pulled back into here? The answer is no, you wouldn't, because the model is completed. When the model is completed, entering here, you essentially is 50-50 chance. There might be a price continue turning from a sell side model into the buy side model, and essentially enter at the max pain point, right? But in this case, I know the sell side model is not completed. This is just generating more buy side liquidity. Once buy side liquidity is generated, you see all these equal lows, equal highs get swept. Essentially, this is just internal model, right? These are fragment models, right? These are overall just a smaller fragment model that has built in with an overall big seller model. This just get taken of the sell side, and then you flush. This is the displacement. We just sit and wait. Either you're wrong or right. You will find out at the end. You do not get smarter once you place a trade in. So don't FOMO and pull in your break, stop loss into break even until you know the certain. So for example, once this price, let's say if this price break this and close above this, yes, then I'll pull my stop loss into break even. This is essentially the price should not pull all the way back here into the zone. If the price already closed, candle closed outside this recent generated low, it should not create a newer high. Hopefully this is helpful, and if you think these type of video and education video are helpful to you for your trading careers, please leave a like and subscribe. I'll continue posting more of these type of contents. Other than wise, stay safe and happy trading.